Welcome to Financial Ginger. I am your host, Jacob Johnson, the insurance agent that is known for answering his phone. Quotes are always free, 801-216-8444. Text or call or email me. Links will be in the description. Today I have, it sounds a little bit lame. I don't know, maybe it's not lame.
I don't think it's lame. It sounds very like radio show-esque, which is not like the same format as a podcast, in my opinion. Podcasts, I love listening to podcasts because they're casual and I feel like I can sit in the room and like I'm there during the conversation. Radio show it seems like it's kind of on a pedestal.
We have caller number 2.
Yeah, exactly.
Yeah, so I need to find a way to introduce, because the feedback I've gotten is, I didn't realize who you were talking to for the first 10 minutes. I'm like, okay. Well, today I've got Kenyon. So I've got to find a way to make it a little bit easier to just slip into the conversation and get going. But whatever, it is what it is. And it's just going to get better as I learn and grow and get feedback from people. So if you have feedback on how I should start this show, leave a comment and then Kenyon can read it and tell me, Jacob, do better, be better.
That's right. I'll DM you. I'll send it over.
Today I've got Kenyon Wallin on the show. He is the realtor that helped me buy my, are you the seller's agent? Is that the correct term for that one?
Yeah. Seller's agent, builder's agent.
Builder's agent for that one, because the other agent I used from a buyer was Deveray, who was the first episode of the show with buying that same transaction. So this is the other half of the transaction. Why don't you tell people a little about what you do and how you got into it?
Yeah, no, I don't know like how far to go back, but
whatever you want to do.
I guess I'll just start, because real estate is something that I think you hear a lot of people's stories, and most of the time it's like, I was out of my job, so I started real estate and now it's been great ever since. I think my origin is a little bit different. And I think that contributes to why, this isn't a flex, but why I'm good at my job is because I have a lot of passion for it.
It's okay to flex.
Okay. We're on a podcast, I guess. It was back. So I actually I didn't start in real estate at this time, but this is when my interest in real estate started. I was prior to my mission, I had a job answering phones for a nutraceutical company, which is like
nutraceuticals.
Yeah. MLM.
Yeah.
In Thanksgiving Point, right?
We all know who it is.
Yep. Everyone works in one of those at some point if you live in Utah County.
Yep.
So,
or gets recruited by 8 of them. But anyway, different story.
Yes. So I started there answering phones, upselling people on products. Wasn't my favorite job, but I was leaving on my mission in like 6 months. So I didn't really have the drive to start something myself if I was only going to have 6 months to do it. So short-term thing, worked there, and I ended up getting a call from this guy, real estate guy out in California. He does business here in Utah. He does business in California, and he uses a platform, an online platform based here in Orem. So I was talking to him, and I talked to him for like an hour, not related to my job. So probably not like the best employee, because I would get to know people and I would talk to them about their lives rather than trying to upsell them on these products. But I don't even remember the guy's name, but I remember taking notes from this conversation. I wrote down the website that he was using. I wrote down the process that he used to start. I wrote down how much he was making, which, I mean, that the money was never really what drew me to real estate in the first place. So anyway, long story short, wrote all that down, went on my mission, came back from my mission, and realized that I had left all those notes at that company. I left it at my desk.
So no.
So
you're not getting it back.
Yeah, I don't know the guy's name. I don't know his the company he's affiliated with, but I just remember feeling like that's what I wanted to do. Like I had a moment during that conversation where I was like, real estate is what I want to pursue. So, long story short, got home from my mission, COVID, right? No one's out doing anything. It's hard to find jobs in person.
That sucked.
So I end up getting a job with ClearLink, also here in Orem, selling internet, like satellite internet over the phone. ClearLink's cool. Hated the job. Yeah. I was locked in my basement alone for 8 hours a day.
Ugh.
Couldn't use my phone or anything because we were dealing with like private information, financial information. So anyway, hated that job. Buddy reached out to me and said, "Hey, Kenyon, why don't you come build footings with me?" So I take this job. It's like $18 an hour right off my mission. With it at the time, $18 an hour is like, that's a pretty good. That's pretty good.
Yeah, not bad
back in 2020. Yeah. So take the job.
For entry level work, not bad at all.
Yeah. Someone with no experience.
I mean, heck, when I got my first job in 2019, working where I work now, it was $13 an hour.
Okay. Yeah.
Just answering phones.
Yeah. And
then I got an extra $1 once I was licensed.
Okay.
And then my boss was like, "You're good. We should figure out how to pay you more."
Yeah.
I want you to stick around for 7 years.
That's awesome.
Cool. Building footings.
But building footings, I kind of made my way up in that company. So I went from footings, I ended up getting my commercial driver's license, started pulling trailers, became a manager of the fleet. So it was an excavation company. And then from there, I thought like, okay, now's the time. Let's strike off. I always wanted to be an entrepreneur. Let's strike off. Let's start a company. I ended up starting a company with a family member that we were doing framing. We did a lot of commercial framing, some residential framing. It ended up tanking because we couldn't get guys to stick around. For whatever reason, we were paying them well. I just don't think we had like the structures in place to keep people around, which some of the best lessons are.
Learn the hard way.
Yeah, definitely.
You paid tuition.
Yes. So I end up looking for jobs on Indeed, like everyone does. I found a job at DR Horton as an assistant superintendent. So for those that don't know, a superintendent is someone that builds homes, right? You've got a community. The entire community is managed by a project manager. Underneath them is a superintendent who builds usually one product type. So whether it's single family homes, townhomes, and then underneath that superintendent, you have an assistant superintendent. So you're almost like the bottom of the food chain when it comes to construction. Get this job. I end up working there.
Because supers don't even swing hammers.
No,
right?
It's all management, and an assistant super doesn't either. But you're mostly like checking the finish side of the schedule. So you'll have the superintendent building from dirt up to basically drywall, and then the assistant superintendent takes over from there and closes the home. So it's kind of a 2-phase process. Anyway, assistant superintendent for a year. I end up being promoted to superintendent, which at the time I was also going to school for construction management. Kind of forgot all about the real estate thing. Anyway, construction management.
The dream faded.
Yeah, exactly. I kind of lost sight of what I really wanted to do, just because I think you look at the numbers, and I think everyone's guilty of this at some point, and you say, oh, I would love to go to school and come out of school making $100,000 because I know that I can support a family on that salary, which you can. But it's not necessarily what I was passionate about. I just saw like the potential in the construction industry. Yeah. I think that construction is one of the industries that will last the longest in today's tech era, given AI. So anyway, we'll move past that, come back to that later. I'm a superintendent. Meanwhile, I'm doing school at UVU. I drop out because I realize even with a degree in construction management, my entry point is going to be where I'm currently at as a superintendent.
You're already there. You're already doing it.
So I'm like, why would I pay tens of thousands of dollars for a degree when I'm already reaping the benefits of that degree? Yeah. So drop out of school, 3 semesters in.
Jealous. I wish I'd done that. No, I'm glad I got my degree, but anyways.
Yeah. And then rather than going to school, I start my real estate licensing because I ran into someone essentially where it kind of reignited. Oh yeah, I was gonna do real estate. So I better get on that. So I get my real estate license. It takes me a couple of months, and then I have this job with DR Horton. My goal is to go from superintendent to sales agent. That was kind of a thought that I had in the back of my mind the whole time. So I had been talking with management. Anyway.
It's foreshadowing right there.
Yeah, a little bit. There was probably a year between the time that I got my license and the time that I actually had an opportunity. And it was just all patience because not everything always works out on your timeline, right? So it was just waiting. An opportunity popped up. I interviewed for it. I had prepared for it. I knew I had someone on the inside that kind of told me like, hey, you're going to want to read this book. You're going to want to know these things for your interview. They're going to ask you to role play. You're going to want to know the sales process. You're going to want to know about a product. So fast forward.
It's not nepotism.
No, it's not. Not someone that was
your friend.
Yeah, I wasn't related to this person.
That's awesome though.
Yeah, he just kind of
getting a coach.
Yeah, it was a lifesaver. Really, it's what boosted me in this interview. End up getting the job, and here I am 2 years later.
Yeah,
in real estate, selling for DR Horton. So I think that's a really drawn out story, but the advantage for me of going from construction into real estate is that it helps me so much in my daily job.
Yeah.
Right.
When you said you did framing, I'm like, that would be super useful to know.
Yeah. Yeah. If you know the building code and you have buyers that are asking you like, hey, why is this wall here? Or can I remove this wall after I purchase this? Yeah. Yeah. Knowing these types of things, not every sales agent's going to know that. Hardly any of them are going to know that. So I think having that construction background has helped me a ton in my job. And I'm not advocating for everyone to go from, to spend 3 years in the construction industry before getting your real estate license. But what I am saying is if you already have that experience in construction, I do think that it can be super beneficial, especially in new construction or fix and flips or, whatever niche of real estate you're into.
Yeah.
So.
Well, cool. That's awesome.
Sorry, that was really long.
No, I like it. I think it's important to people tell the story because it helps them connect and see the reality, right? Like, I didn't know most of that stuff about you.
Yeah.
Right. Like, that's super cool to know. Right. Like, I used to, here's just random side story. I used to fix lawnmowers when I was a teenager. Like, my parents paid for me to take a little class and I learned how to fix lawnmowers and fixed a couple of my neighbors' lawnmowers, just maintenance stuff. Okay. And it fixed their lawnmower. Like, they're like, my lawnmower doesn't run. Hey, Jacob, do maintenance on it. And just needed an oil change. And I cleaned out the carburetor. And like 98% of small engine problems are carburetor or the float. If you have like an old plastic float or some aluminum ones will like rust. Anyways, that's not super important. But I ended up doing that. And then one of our neighbors, Zach, he's like, hey, my lawnmower's not starting. This was like right after we moved in. And I'm like, oh, I can come help. I hadn't touched a lawnmower in 10 years. Yeah. 20 minutes later, his lawnmower was running, right? It was just like, this is fun, right? And you made a friend that way. Yeah. And so it's cool when you learn all the things or ask for help, like the people that will come out and then you learn, you connect and you make friends. And I don't know, it's cool. If you feel related to anything Kenyon said, leave a comment.
Yeah, no, but it is such a relatable, in my opinion, a relatable story because I think everyone has aspirations for what they want to do and who they want to be.
And everyone's worked in a call center and hated it.
Yeah, that's a great point. But people don't know that there's a safe route that can be taken to achieve your dreams. You see a lot of influencers on social media that are saying like, quit your job today if you want to pursue this. It doesn't have to be that drastic. Sure, there may be a quicker route to success if you do kind of forfeit your current life and go all in on something else. But there's also a safe route that can be taken to achieve what you want to do. Yeah. So
that's so weird. And this is not fully related to real estate and all that, but like I kind of grew up with you didn't quit a job until you had a new one. Because like my dad, when he was working for Toys R Us and they told him, hey, we're closing down, we're going to let you go in 6 months. He was interviewing like 100 jobs. Right. And then he ended up moving over to the sales job. He's been working for forever. But it's like, you just didn't. And I've seen people that do that. Like they'll be like, oh, quit your job and just pursue your dreams. And then it's like, well, what about having some income, right? And you can do it either way. Yeah. But it's obviously a little bit easier to be like, I'm still working this job while doing this as a side hustle. Or I've had some people that I've interviewed on the show that have been in here, and it's like, hey, I was still working for this company and I was doing this on the side, and then it turned into a full-fledged plumbing business, and now that's my job and I quit that job, right? Or I have a friend who he does like Forex, like trading and stuff like that, and do this training. Like he goes to like Costa Rica and Europe and stuff like that to do trainings for people on like how his software that he developed worked. Crazy. He worked for Oracle doing software development for years. And while he was successful traveling around the world with it, he still kept his job because he was like, I need security. And it's like, wait a second, you're making 100 times as much money. Why are you still working as a software developer for Oracle when you're in this huge company, right? It's like, it's just interesting, right? To see that he was doing that while he was, and I don't know. And obviously you can do it either way, but a little bit more security if you're having some income while you're building something until it gets to the point where it's
yeah.
Yeah.
Well, and I think you brought up something important there, because there is a time to transition.
Yeah.
Because there are people that are caught in the trap. Oh, let's go to college. Let's get this job. And then I'm going to be working this same job, and I'm going to be taking, a $5,000 pay increase every 3 years or something like that,
or
for the rest of my life. Yeah. When in reality, like, you can have a job, you can have security, you can still pursue your dreams, you can still pursue what you want to. You just have to know when to transition from the safety net of a full-time W-2 salaried position into doing your own thing.
Yeah. And I have some people that tell me it's harder later. I had Savannah Romney, she's another real estate agent on, and we were talking about, like, what advice would I give to someone who was 20? Right. And I'm over 30 now.
You don't look over 30.
I'm 30. I turned 32 in a couple of months.
That's crazy.
Dude, it sucks. It's so weird being, anyways. Yeah. With all the youngins around me. But I was saying that my advice would be go for the bold. Like, if I could have gone back 7 years, don't get me wrong, I love what I do. I'm not super like, oh yeah, I love insurance, auto and home insurance. It's the greatest thing ever. Like, it's a job, but I am passionate about serving people. And I have seen people who have the same coverage with me as they had with someone else, but they feel more comfortable because I took time to explain those things, right? Or explaining, like you say, with structural walls, or how this works or how that works when they're buying a home, right? Like, taking time to explain someone to their level. Some people just get me a price. That's all they want. Some people help me understand what this coverage is and what I'm paying for. And I have some people had the exact same policy with me that they had with the previous agent. Maybe I saved them a couple bucks. Maybe I helped them understand, whatever it was. But I'm passionate about people feeling safe, right? Oftentimes when I pray at night with Kimberly, I'll pray, help us to feel safe, right? It's just as important to be safe as it is to feel safe. And that comes when you're doing a real estate transaction. That comes when you're doing an insurance transaction. So in business, it's my philosophy that if people feel good, understand, feel that they can talk to you when they need to, not feel, right? Like, if you've probably had this happen where someone was talking to you about doing a real estate transaction, they go with a different real estate agent, and then they call and they ask you a question. It's like, why don't you, oh, I don't feel I can ask them this. Like, well, you're paying them to do a job for you. Like, and I'm fine with that. I answer questions for people insurance all the time if they don't work with me, because I'm a broker. I only have so many options. Sometimes it's like, hey, it was better for them to go with State Farm or American Family or another company. And I'm fine to review policies. I do it all the time, even out of state. People will be in Idaho or Nevada, and I don't work in those two states, and I'm happy to review policies. But if people feel good, it's easier to do business with you, because to do business with someone, they need to know you, they need to like you, and they need to need what you've got. So fulfill that. Anyway, so my advice, I'm all over the place. Can you guys tell that I'm ADD? My advice to the younger self would have been, hey, go do the $0 salary job, right? Start, when I had all my licensing, start doing I'm selling insurance and life insurance and investments and all that stuff that I wanted to do. Go find a brokerage. And I did. I had a brokerage that was willing to. And after like a month, I stopped. Because I was just like, oh, this is scary. I need a paycheck. Right. But like, okay, I was single, just graduated college. I didn't need much money. Right. I'm like, I had 10 grand in 2018. Like that could have lasted me, a long time without income, right? Not that 10 grand is a lot, but right. Like, obviously it's enough money to survive for a little bit while you're building a runway. It's a lot harder when you're 35, you're married, you have 3 kids, right? I'm not 35. I don't have 3 kids, but right. I'm just giving you an example. It's a lot harder for that person to jump into entrepreneurship.
Totally.
They have a lower runway because it's like, okay, well, it's not just me that doesn't get fed if I don't make money. So that's the advice I give to younger people. It's like, hey, why not? Worst case, your money runs out in 6 months or a year, and you have to go get a normal job. Right.
No. It's risky, but it's not necessarily like you're putting your life on the line.
Risk versus opportunity cost.
Totally. And to be clear, the way that I see it, at least, is like, some people don't have the passion for entrepreneurship per se. That's totally fine. I'm not an entrepreneur. I wanted to be, hence starting a framing company. But I work for the largest home builders in the country. I'm not an entrepreneur, but I have a job that I have control over my business, which is huge. It's all reliant upon my relationships not only with people that are buying homes, but with real estate agents, with brokers, and with just everyday people that you run into on the street. So I'm in control of my business, but I'm not an entrepreneur. Does that make sense?
Yeah, I'm similar, right?
Yeah.
I mean, I don't own the Rob Jackson insurance brand. I work in there. I'm paid, and I've got a way that I'm able to have control over my income and some of my time.
Yeah.
Yeah.
Which is time is like, to me, the most important thing. A lot of people think that real estate jobs are very demanding of time, and they are. You see the memes all the time where it's like, realtors on vacation, and they're still picking up their phone all the time, which is totally true. My wife hates it. I've got my phone on all the time. I'm always answering calls.
I mean, I've texted you at 8 or 9 p.m. at night and gotten a response. Yeah. So
I literally have my work phone on me as much as I have my personal phone on me. And I'm not saying that to tell people to reach out to me at night, but what I am saying is,
you heard it. Reach out to Kenyon at night. Just kidding. Sorry, Casey.
What I am saying is it's, just because it's demanding of time doesn't mean that I don't have control over that.
Yeah.
Whereas with a typical, salaried position where you're working for a corporation, for a salary, you don't really have the freedom of time.
Yeah.
That I do have, which is awesome.
No, and I get it, because I have times where it's like, hey, this is coming up, short notice. I'm going to take half a Friday off.
Yeah.
Right. And I can do that. There's flexibility in the job I've got. It's like, hey, this thing came up, or whatever, I'm going to go. Or I had a situation where a Monday morning, a couple months ago, my sister-in-law texted and was like, hey, my daughter, right, your niece, my wife's niece, whatever, my niece-in-law, whatever the word is for that. She has a dance performance at 2:00 this afternoon. I forgot to tell you about it. Just tell the office, hey, I'm gonna be gone for 3 hours. Yeah. Right? Like, there's flexibility. And obviously I'm not always able to, or I have times where people are calling me on a Saturday, or I had a situation recently, I've talked about it on the podcast before, where someone's mom was driving their car while they were out of state, got in a car accident, called their son, said, I don't know where all this stuff is. Call Jacob. I just got out of church. It was like 11:15 on Sunday. Pick up the phone while I'm driving home in the car, and I'm explaining to her, take pictures of the license plates, take pictures of the driver's license, take pictures of the insurance paperwork. Usually it's in the glove box. If not, let me know. I'll log in on my phone and text you a copy of your insurance card. Right. And I'm happy to do that. I like that trust that people can have, and it helps them. And he just ranted. He called me on Monday afterwards, and then I texted his mom again the day after, and it's like, hey, are you doing okay? If you need to go see a chiropractor or a doctor, realize there's medical coverage on the insurance, like explaining what the coverages are.
Let's pause there, because everyone's had car insurance their whole life. Everyone's had home insurance their whole life. If you're a homeowner, I've never had, my insurance agent's great right now, but prior to now, I've never had someone that I have that relationship with where I would know, like, I could reach out to them in a time of crisis, which is, in my opinion, a huge, it adds a ton of value to your policy. Sure, I would gladly pay a little bit more for an insurance policy if I knew that in the time of crisis, I have a resource that I can reach out to that's not just like a robot on the other end of a phone, right? Because I think we've all been there where I've had to submit claims for my insurance, and I've called and it's been like, oh, press 1 for this department, press 1 if, press 2 if this is your situation. And it's the worst.
Press 3 for roadside assistance. Yeah. Press 4 for a glass claim. Unfortunately, sometimes I do have to put you in a queue for something like that.
Sure.
But either way, you got to talk to me first.
Yeah. And I feel like there's a lot of value in that, because I've had to work through claims where I'm spending so much time on the phone, so much time waiting around for
the mental load. Yeah.
For a lot of things that are out of my control, where if I had someone that I knew I could rely on, that I could reach out to for even just for an update, like, hey man, can you tell me like where things are at with this, would be huge if I could go back and change some of those insurance decisions prior to now.
So three really quick stories, because again, ADD. I've had people come back to me, like they leave, they're like, hey, I found out a price. I'm like, sweet. I actually encourage it. Sometimes I'll have people where I do a renewal and I'm like, hey, I think this price might be too high. Go check these 2 companies I don't write for. And they'll come back and like, yeah, it was cheaper. Just like you said, I'm going to go. I'm like, sweet. Guess who they're going to call when their rate goes up? Yeah. Obviously me, right? Totally. Guess who they're going to call when their mom moves from Idaho, or their cousin moves from, Colorado to Utah. Oh, my insurance guy, call Jacob, right? Yeah. It's easy. Here's his phone number. Here's his contact card. So that happens all the time, where people will leave because they found a better price, and then they come back in 6 months and I got times where people are like, I don't care that your policy is more expensive. You answer the phone.
Yeah.
I can get a hold of you. Or I've been trying to get a car added to my policy for 3 weeks and my insurance agent hasn't responded to my texts or calls or emails. I don't know what's going on.
Yeah.
Fine. How you? It's like people. I had people in the comments of my videos being like, "Isn't answering the phone the bare minimum? Like, why is that such a flex?" I'm like, it is a flex because there are so many insurance agents that just don't pick up the phone. Yeah. It's wild. They want to build until they've got their $100,000 a year, and then they want to hire an assistant and go golf 2 days a week. Nothing wrong with golf. Nothing wrong with that business model. I'm in it for the long haul. I've been doing it for 7 years. I'm probably going to do it for the next 30 years, 35 years. Yeah. Right. Because the second thing. I suppose I'm not going to have 3 stories because I kind of combine the 2 of them together. But the other part with answering the phone, actually, I suppose I'm going to leave it there. That's good. That's good. I'm all over the place today.
That's okay.
Didn't take my pills today.
That's all right.
Yeah, it's fun. Kind of shifting a little bit different towards more of the business. I want to talk a little about what you do and how it helps people and all that. Obviously, I was one. It was great. I was looking to buy property number 3. And it was just a great deal, great location. I liked moving to Spanish Fork. The whole deal worked out. It was fun to talk to you along the way, and then end up being your neighbor.
Yeah. I ended up buying a home just up the road. So.
Yeah, but what do you do? How do you help people? Tell us a little about working with DR Horton. I don't know, leaving it very open ended.
Yeah, no, that's great. So my job as a builder's agent or as a seller's agent, I sell exclusively for DR Horton. So I do have friends that come to me or family members that come to me and say, hey, we want to sell our house, or hey, we're looking to buy a house. Obviously, if they're looking to buy a house, I will say, this is what I've got right now. But if you can find a better deal, by all means, go buy that. I can't right now. I'm not able to help sell other people's properties. So I'm exclusive to DR Horton, which has...
And you're only selling their new builds, obviously.
Yes. Which has its perks. So I work in Salem right now. I'm in our Viridian community. I can sell anything down south. So Spanish Fork, Salem, obviously, Santa Quin, and Provo. Those were the 4 areas that I'm able to sell in. Unfortunately, all of the other communities sold out. So now I'm only in Salem. That's where I sell exclusively full-time. A lot of my business comes from, like I said earlier, referrals. It comes from people who have heard my name, whether it's on social media.
Your Instagram is
shameless
funny.
plug. Yeah, Kenyon Utah Realtor is where you can find me on Instagram.
It's great. His stuff's funny. Your backflip off the banister.
Which is, yeah.
It was impressive.
It was a real backflip too.
Believe it or not. Was real. Was not an edit.
So, you're all right. We got the cough out of the way.
That's a clip. No, I'm just kidding.
The majority of my business comes from, like I said, referrals. The other half or less than half comes just people that walk through the door, which is really cool. It's a really awesome opportunity to be able to sell people a product just based on a walk-in. Because those types of leads don't come in often. How many times do you have people walk into your office saying, hey, I'm looking for insurance?
It happens, actually.
Does it really?
Yeah.
Okay.
Yeah. A lot of people walk in and they'll be like, hey, I just got my driver's license, 16-year-old kid.
Really?
And then, yeah, it's weird. Anyways, that's it. Okay. It's definitely not common, but it's probably a monthly thing.
Okay.
Probably less frequently than it happens to you.
Probably a little bit less. I thought your answer, honestly, I thought it was going to be, it never happens. So,
yeah.
Shows how much I know about insurance, but, yeah, I basically take people, the part of my job that I love is I'm a problem solver more than a salesperson. I don't believe in selling someone a product that that I'm not passionate about, if that makes any sense. DR Horton, because we are a large builder, because we're the largest builder, we also have the biggest bank, which means we're also able to offer incentives that no other builder or any other seller can offer.
Yeah.
I don't think people realize how far those incentives can go. So just an example, I've had several people come in after having visited other builders in our area. I'm not going to name other builders.
Yeah.
But they'll go walk through a model home. They'll say, hey, this is the purchase price. I can take them through our model home, which is very similar in size. It's very similar in location. It's very similar in price. But when we compare the numbers side by side, our home tends to be $300 to $400 less per month simply just because of the incentives that we're offering. Not only that, we're very focused on building like a community that is for active families. Not exclusively, obviously we're open and willing to sell to anyone and everyone, but most people, especially in Utah County, are wanting amenities. They're wanting pools, they're wanting bike parks, they're wanting dog parks. Pickleball courts right now is huge.
Pickleball. What's up with that?
Yeah. So
do you play?
I do.
I don't. I've never played it. I should.
It's fun.
You'll have to show me sometime.
It's so fun. Yeah. We've got, I
like table tennis, so I imagine if it's anything like table tennis.
I started as a table tennis guy.
Okay, cool.
Yeah, I had a ping pong table on my back. Or in my,
I only got into table tennis on my mission in New Zealand. I met this guy who was like 90 years old and still played table tennis. He was like a 15 or 13 time like New Zealand table tennis like champion or whatever for like years when he was younger.
Yeah.
And this guy had like a gimp leg. He had both of his legs replaced. He had like a metal rod in his calf, like all these leg problems, and he could barely walk. But when he started playing table tennis, he's like leaping left and right. And so he gave me a paddle while I was there, and I played with him, and I think I maybe scored twice on him, like 2 points ever in like 6 months of playing table tennis with this guy.
Okay.
And so I still have the paddle somewhere. It's in a box probably at home, but so that's how I got into table tennis, and I've played a few times. I'm not good, but I enjoy the game.
That's fun.
Cool.
No,
Pickleball.
cool.
We'll have to do it sometime.
Yeah, totally.
Once it's warmer.
Fun. Yeah, no,
well, it is warmer. It's 60
fun.
degrees, so we're good.
Yeah, I guess that's true. December in Utah.
Anyways, they want the amenities, pickleball courts.
Yeah.
People want pickleball courts.
Anyways, bottom line is I don't try to sell people on our product because it provides a paycheck. Obviously, that's why anyone does any job, right? Is to support their family, which I do. But more so, I prefer to sell because I'm truly passionate about the product that we're selling, and I truly believe that in most cases, what I'm selling is a better deal than anyone has ever found. Not ever.
Yeah.
That's a bold statement, but it's the best deal that you can find on the market right now, in my opinion. So, and there have been times where people have come to me where they have found better deals in our same area, and I've told them, you're getting a really good deal. Like, I'm really happy for you. If anything changes, let me know, but just know, like, I fully support the decision to buy elsewhere because you are getting a better deal. So there are times where I have to acknowledge that, and I'm happy to do so, but those times are pretty rare.
Well, that's just good business practice in general, right?
Yeah.
Like, I do that all the time with insurance. People are like, I found a better rate. I found a better price. I found better coverage.
Yeah.
Send me a copy of it. Let me review it.
Yeah.
And then I'll look at it and I'll be like, yeah, that's better. Go with them.
Yeah.
Sweet. Or sometimes I'll be like, hey, go with them. I actually had this happen, and someone bought a couple rental properties from Parker, my buddy. He's an Edge Homes rep.
Okay.
And he sends all of his people to me for quotes. He's like, Jake, he has like 15 properties, and I do the insurance on all of them. And he just like, it's nice. I don't have to worry about it. I text Jacob an address. He sent him the year the roof was replaced, and he has everything else to do quotes for me. So
Sweet.
He likes that. But he'll send me someone, and he's like, hey, I did a quote with the same company. It was with Safeco, and it was cheaper, like through a different agent. Why? Send it to me. And I was like, that is cheaper, but you need to change these two coverages. Like, he only had $100,000 of liability. I recommend at least $300,000. It usually is like $10 a year difference. It's like no brainer to get that, especially if you have dogs. And then he was missing a few other little tiny things. And I'm like, this one's optional. This one, I would say, is a must. Like 60% of home claims in Utah are related to this. 60% of claims that are denied are related to this because it's not guaranteed. But people would assume water and sewage backup is covered. What about water damage? It's a different, separate. Anyways, so he's like, he went in just those two things with the other agent. It was great. He'll be back in a year. You know, like, so I'm fine. It's great business practice to be willing to look at other people's deals and help them analyze it.
Totally. Tell me. So I think you've referenced this twice now. Not that I'm counting, but you've said you'll be back in a year. Is that because every insurance ever increases? Okay.
Yeah. Well, not increases, but like most people's policies renew once a year. Okay. So usually whether it goes up or goes down, or there's inflation guards built into most home insurance policies where they automatically go up in coverage 3 to 5% a year. Right. So if you had $500,000 of coverage, right, next year might be $525,000. So the coverage goes up, right, automatically increases inflation guard, which makes sense, right? Over here, about a house 20 years ago, you'd want that insurance to go up. So that way you don't have to think about it. But sometimes it's too much, or so people will come back to just, hey, can we double check and make sure this is the right coverage? Okay. Or, hey, my rate went up a little bit. can you check to see if it's competitive still or whatever? So that's why I always say they'll be back in a year, because people usually check their insurance once a year, and I'm happy to review whatever their renewal is, run other options with, I'm a broker, so I represent 25 companies, and say, yep, that's still the best. Cool. I have some people that I've worked with for 5 or 6 years before they finally buy a policy from me.
Okay.
I have one guy that I'm working with since I started, one of my dad's best friends. And I am about to sell a policy for him in like a couple of weeks when he's closing on a new house. But
okay.
So, right. And I'm fine with that. Who cares? Like, if it takes 7 years for me to get your business, I don't care. Just do good, get good. And he sent me referrals. Cleve has sent me people.
Totally.
It's like, hey, I trust Jacob. He's not even my agent.
Yeah.
That's real value right there. So I'm a big,
And that happens to me too, is people will come in, and I had one guy the other day who the timing just wasn't right for when he was looking. He offered on a townhome. His offer wasn't accepted. He ended up purchasing with another builder, got what he wanted there in a different location, but he brought his brother-in-law back to me because he was like, hey, I actually had a really good experience with you. I believe in the product that you're selling. I believe in the price. We just weren't able to make things work on my end, but my brother-in-law is looking now. And I'd love to set him up with you. So anyway,
that's cool. Ended
up getting a deal with his brother-in-law just because he liked the way that I presented our product.
Yep.
So
do good, get good, beget good.
Totally. I love it.
I love it too. Okay. Questions that I want to keep going on. Sorry, I don't know why my brain is just so unfocused. It's probably because it's close to New Year's, You're
focusing on tomorrow, partying on New Year's Eve.
Yeah. Huh? Yep. Gotta make homemade fudge or whatever. What am I even asking right now? This is just so fascinating. I'm still thinking about pickleball courts.
That's okay.
Because everyone wants a pickleball court and a dog run and all those things.
Do those, by the way, does that increase can you have that covered under your insurance if you're doing homeowners insurance? Like, does anything on the exterior of the home, is that covered? Any
Great
improvements?
So improvements, yes, if it's a part of your home, but it can depend. So, right, if you're in a townhome or a condo, the homeowners association will have their master policy that covers the exterior of your unit, right? So, but if there is a claim, like let's say you've got 5 units that are touching each other, right? They're 5-plex, and they each have their own owners, and there's a fire in one, and then that spreads and all 5 units are damaged. The homeowners association will come in and they'll say, hey, we have a $50,000 deductible is pretty typical. Some companies it's as high as 100, some it's as low as 10, but 50,000 is pretty typical in Utah right now. They'll say there's 5 unit owners in this building, $50,000 deductible. We're going to assess a $10,000 deductible to each one of them, and then the HOA insurance comes in and fixes the exterior. Okay. So your insurance policy can pay for that $10,000 deductible and also the interior of your unit, plus upgrades and stuff. So you have different coverages on your homeowner's policy. You've got A, which is the structure. Usually, if you're in a town or a condo, it's essentially minimal, right? You'll only need covering for the interior. Most people, $100,000 is usually adequate because it can cover that HOA deductible. Or if it's like a 10-plex, right? Some condos are 10-plex. They have a $50,000 deductible. You're only paying a $5,000 deductible, right? They split it among all the unit owners of the damage. Or if it's like an auto, like let's say a drunk driver comes off the freeway and hits 3 buildings, it's one claim. It's like there might be 30 people splitting that $50,000 deductible, right? So it depends, but I usually recommend at least matching your HOA deductible in case there's a weird situation where you're the only one that has to contribute, which shouldn't be very often, but it can. And then you want all your interior covered. So usually 100,000 is what I recommend. Sometimes if you've got a larger unit and you've got a finished basement, I might say 125, but it does depend on situation by situation. Because what if you have an interior only claim, right? Like your toilet overflows upstairs and that floods into the basement. You're not using the homeowners association because it's not exterior. You're using only your policy is $125,000. Enough. That's a conversation that we can have. So they can cover upgrades, but it depends as well because more and more HOA policies are including optional coverage for parts of the interior. I've seen some policies that literally will have language that says this covers all upgrades, improvements, attachments. Like it's pretty broad vocabulary on the interior of your unit. But the key there is it needs to be part of your unit. Yeah. Right. Oftentimes water softeners, reverse osmosis systems, they're not considered attached. That would be covered under personal property coverage, not the structural coverage. So that's the other part. So usually when you have an HOA unit, you have your A, which should be at least the deductible. I recommend more than that in case of an interior only claim. And then the coverage C is personal property. That's all your belongings. Basically, if you turn a house upside down, most things that fall are going to be considered.
That's a good way. Okay, that's a good way to explain it.
Yep. Because like flooring, your drywall, all that's part of the structure, right? But again, the weird thing, kitchen appliances. A lot of people think that's attached. It's like, no, your stove isn't attached. They might have a little thing to make it not fall over, but it's considered a detached. Appliances, your kitchen appliances are part of your personal property coverage, not part of the structure. So yeah, that makes sense. It's a little bit there.
I'm gonna kind of dive deeper into that, if you don't mind. I talk to a ton of people about insurance. There's a part of our contract which is going over insurance, what we recommend for insurance. Usually I only go over it for townhomes because single family homeowners usually understand that they need an HO3 policy.
Or with single family homes as well, there's a lot more standardization in the coverages. Okay. So a lot of times you'll be like, what's the cost to rebuild your home? Or you run an Xactimate, an RCE, replacement cost estimator, to determine the expected rebuild cost. Because you don't, like, let's say you buy $1 million home, the land might be worth $250,000, right? You might only need $750,000 or $800,000. So anyways, you determine the value. Most of the other coverages are percentages of that. So you have your home million, just to keep it round. Coverage B is other structures, so like fences, sheds, things that aren't your home. That's usually automatically 10% of that. So you'd have $100,000 right off $1 million home. Some companies do 20. These are typical. Coverage C, that's all your personal property, is usually automatically 70% of coverage A. So if you have $1 million policy, $700,000 per spot. Some companies do 50%. It's becoming more normal to be lower because home values are so high. Right. But anyway, 70%. And they're more standardized. Where with townhomes and condos, it's a little bit more a la carte. You choose how much coverage you want in each category.
Interesting. Okay.
Yeah. Anyways,
that makes sense. No, I talk to a lot of people specifically with townhomes because first-time buyers aren't usually familiar with the insurance.
Yeah, they're not as savvy.
So what I tell people, you can tell me if I'm doing something wrong. That's kind of the purpose of this question. So I'll normally tell people, hey, you're going to hear from DR Horton Insurance Agency. They're going to reach out to you and they're going to offer you a pretty competitive rate for an HO6 policy. HO6.
Yep. Right? HO6 is a standard for owner-occupied townhomes and condos.
So HO6 policy, they're going to reach out to you. I tell them what I have paid in the past for my HO6 policy, townhomes. I've also told them what I pay for my rental policy on my townhome.
Yeah, but if you have a rental, that's not an HO6. That would be a DP3 type C.
Okay, good to know. Yeah. DP3 type C. Not that I sell to a ton of investors, but it's good to know. I usually tell them to expect between $200 and $300 per year on a smaller townhome. Tell me kind of where...
Is that
depends. Pretty typical?
So it has changed a lot in the last 2 years.
Okay.
But yes, with like Bear River Mutual, that's one of my prime for those HO6 policies because they're so much cheaper than most people. I've had policies as low as $199 a year. I've had some as high as $500. It depends a lot more on the location. So you go out to like Cedar Fort or down to like Santaquin, or sometimes if you're like up in the foothills of like Elk Ridge or whatnot, some of those places are more expensive because of a higher wildfire risk. Another thing that people hate to hear, insurance does use publicly available data they can find about you to determine your risk. They determine a risk score. It's not exactly a credit, right? Like pull, like you're not going to see a pull on your credit. But they do pull data related to you and your name and your date of birth and your address, or your prior address if you're buying a new place, and they will look at that and they do make a score based off of that data. And some insurance companies do pull data that is related to credit score companies.
Okay, that's good to know.
So I've actually seen people's rates for auto insurance and home insurance go down when their credit score improves. And it's because some of the data that ends up in the credit reports does end up in the data
similar.
That goes.
Okay.
Yeah, there's a CLUE report, CLUE database. I don't actually know what the acronym means that insurance companies use. And a lot of that data, some of that data overlaps. So I've seen people where they go from a 600 credit score to like a 750 and you rerun. That's actually a great opportunity to rerun your insurance rates. Okay. Because I've seen people's rates, literally auto insurance drop $100 a month when someone goes, that's an extreme example, but if your credit score has dramatically improved in the last year or two, it is a great time to check your insurance rates. It's more important for auto insurance than home insurance, but it can check your rate. And I've actually had situations where I've rewritten someone with the same insurance carrier. Like you're with Bear River, I'm rewriting you with Bear River. I ask the insurance carriers usually want you to ask permission before you do that because it's like you're already with them. Okay. But it's like your credit's improved. they use whatever your credit was at the time you bind. So if it 5-10 years down the road, they're still using that same score because they don't want to pull that data again. They'd have to ask you permission and all that. So you just do a new quote. It's like, oh, look, this policy's $100 a month cheaper on your auto insurance.
That's super good to know.
Yeah. So get kind of weird. Also, if you're shopping for a home, bundling auto and home, right? I mean, I hate it's a common thing, but a lot of insurance companies 10 to 18% discount on each policy for bundling them.
Okay.
Because homeowners are seen as a lower risk for driving accidents. I don't know why, but it's statistically speaking, if you own your home, you're less likely to get in a car accident or cause bigger damage. I don't know why, but there's enough data that supports it. It justifies that to insurance companies. But anyways, on the home side, the reason why I'm seeing more like 400 to 500 rates on townhomes now is usually location based or that credit based. So yeah, but that's actually a safe assumption. Most of the time, 200 to 300 is pretty typical. Rental properties are a little different. I'm usually seeing them more in like the 300 to 500 range. Again, 2 years ago, 200 to 300 was pretty typical for everyone across the board. I actually had one weird situation where I had a rental unit that was like $130 a year. Wow. But it was kind of a weird situation where this investor had like 6 properties and the company I put them with is called Steadily. They have a bulk discount for multiple units.
Okay, that makes sense.
So each of them was like $130, but 6 properties at that, it's like the equivalent of anyways. So yeah, that's a safe range, but it also depends on the coverages they get. Because I've had times where I've sent someone a rate and I'm like, hey, this and everything I recommend is $500. This is more expensive than what I'm used to. And I'll tell people that, I'm like, check these companies I don't write for just to double check. This is best I can find. But if we remove some of these coverages that are usually optional, that I generally always recommend, it's more in what pricing I would usually, and then we have a conversation about it. It's like, hey, if you don't want bird utility lines, you don't want water sewage backup, if you're willing to do actual cash value on your personal property instead of replacement costs, which I usually don't recommend, that's terrible. Because actual cash value is saying you have a 20-year-old couch. Okay, well, if you have a home fire, we're not going to buy you a new couch. We're going to say that couch is only worth 15% of its original. We're going to give you $150 instead of $1,000 to buy a new couch, right? So actual cash value is usually terrible. But sometimes if you're like, I already had the HOA that's covering the exterior, I primarily want this coverage because the HOA has a $50,000 deductible. I want this just to protect myself from that $50,000. Your policy has a $500 deductible or $1,000 deductible. That's better. I only really want it for that anyways. Okay, if we get rid of some of those other coverages, hey, now your policy is $150 and it's covering what you want. So you can intentionally choose to have less insurance to have a lower price. But to answer your question, 200 to 300 is pretty typical for a good qualified single family or townhome condo owner, unit owner, and sometimes that ends up being more if it's more wildfire risk area.
Okay. Can I double click on something real quick that you just said?
Go for it.
So a lot of people don't understand how it works, how the HOA policy works in conjunction with your HO6 policy. I get a ton of questions about that.
You don't have to have an HO6 policy.
Right.
You're not required. Certain lenders do. I think FHA, or not FHA, I'm sorry. Certain government loans that you get direct, like rather than going through traditional banking,
require
some of those policies will require because they look at your deductible and they say $50,000 is unacceptable. You're only allowed to have up to 1% of the home's value as a deductible. If you're buying a $400,000 townhome, 1%, that's only $4,000. If there's a $50,000 HOA deductible, they'll requare you to get an HO6 policy.
And that's simply them looking out for the security of the money that they're lending to you, right?
But most lenders, most programs, you don't have to have a policy. So what happens is now you might be on a hook for $50,000 of a deductible.
Yeah.
But the worst part is, what if you have an interior only claim, like your toilet leaking, and that stays inside your house and it doesn't affect any other unit? The master policy will not get involved in that if it's your unit only. So suddenly you have no coverage and you've got $50,000 of water damage,
right?
$80,000 of water damage. It's
coming out of your pocket.
It's coming out of your pocket. Or worse, what are you going to do, right? If you don't have that much cash, which most people don't have that much cash for. The most important reasons to have an HO6 policy when you've got a townhome or condo that has a master association is limiting your exposure to that deductible and covering yourself for interior only claims. The third reason is all of your personal property. That master policy doesn't cover any of your stuff. All of your kitchen appliances, your bed, your clothing, your electronics. I have people that have, they've got whatever, they've got their hobby or their collectibles too, and you're like, these are valuable
stuff.
A lot of people will opt and be like, hey, my other agent quoted me $25,000 of personal property. I'm like, okay, let's just walk through your house a little bit. You have a kitchen table with a set. Most people that aren't getting cheap ones are spending $1,500 to $2,000. I have one of those nice, like the open up with the extra folds table, like super, super nice. Like replacing that would probably cost me $2,000 to $3,000.
Yeah.
Okay. You've got 3 couches in your living room. Those are $1,000 to $2,000 a pop. I'm like, we're almost at 10 grand and we're not even to your bedroom yet. What if you have a nicer bed? What if you have 3 kids and you've got 3 kids' beds? What about all your clothing? If you've got 100 shirts and pairs of pants, and you've got 3 suits, okay, let's just say $20 a piece on average. You might have, $20, 100 pieces, that's $2,000 to $3,000 on the low end. Let's be honest.
Yeah.
Like most clothes aren't worth that much. They're worth way more than that. 3 suits, your average suit, $500, depending on how nice it is. Like you might have $5,000, $10,000 of just clothing between you and your spouse and your kids. That adds up really quick. And you're not even thinking about television sets, furniture. What about your cabinets? What about sometimes it depends on the language. Most of the time, cabinetry is fixed in your home. I've seen some specific situations where added on cabinetry that you've installed after. Sometimes some ways that they're attached, they consider it personal property instead of structural, but very weird. That's a niche situation. Okay. But you get into it. So I'm usually telling people to have way more than that. I'm like 50,000, 75,000. I do 80,000 on mine, and it's just me and my wife. As I'm like, I want there to be no question that I'm going to have enough coverage if something comes about.
When it's so cheap, I don't want to say cheap, but $200, $300, $400, $500 per year. I tell people that figure, and they're shocked because people think in terms of months. So you divide
$40 a month.
Yeah,
$30 a month
for the protection of $60,000, $70,000 worth of stuff within your home.
Yeah. And
to me, it's no brainer.
It's cheap, especially for townhomes and condos. That is so much cheaper, right? Especially because right now, your single family homes, your average insurance cost I'm seeing right about now is $1,600 to $1,800 a year.
Yep.
Right. And that obviously is covering the full structure as well. And I get it that part of your HOA dues covers the master policy and all that. But it's definitely worth it, especially when it's the $200 to $300 range, or intentionally lower some of those optional coverages, right? Like water and sewage backup, I've mentioned it a bunch. Really common. It's about 60% of denied claims, at least the data that I've read about. It might be a little bit different from that. Is water and sewage backup. What is water and sewage backup? When the public utility lines back up into your home, that is sewage backup or water backup. So you get sewage coming out of your toilet or out of your shower, right? And that's usually when that happens, that's not the builder's fault. That's usually like cities or the way their lines are built or the way they're maintained. Sure. It's more common on older homes. Any home that's over 15 years old is where I say, you know what, that's where I start saying you should get this rather than optionally. But if you don't get it, it's fine. Anything over 50 years old, I'm like, absolute must, especially if they've got older pipes, because what if it fails? And then the other part of that one is buried utility lines, which isn't as important on a townhome or condo. In fact, most companies, you can't get it on a townhome or condo. And that covers the water main and the sewage main. If those collapse or are damaged, it's on your property. Okay, it might be owned by the utility company, but you're going to be responsible for repairing it. And you don't legally own those usually. So your insurance company says, you don't have a financial interest in this. We're not covering it. So that buried utility lines coverage adds in coverage to repair collapsed or damaged utility lines, which could be water, sewage. If you have buried electrical lines or internet lines, that's all covered under buried utility. So there's optional coverages you can remove to make it cheaper.
Sure.
But you definitely want all of your personal property covered. And for $30 or $40 a month, and oftentimes cheaper than that, right? I have a lot of people where it's $20 a month. It's absolutely worth it. And when you can put it in those terms, I love when agents have preempted that when they send someone my way, because it's so much easier. But I'm fine to have the conversation with anyone. But when it's just, hey, here's the guy, talk to him about insurance, totally fine. I'm happy to have the conversation. But you understanding the importance of that is super helpful, and knowing price ranges. That's great.
Well, and what you're saying to me sounds a lot like just another advantage of building or buying something newer. Because if you're buying something old where you do have these utility lines or you do have sewage lines that have been used for decades, they're more prone to accidents or to insurance claims, which in the end is going to just cost you a ton of money. Yeah.
Well, one of the people I had on, Dustin Hamp, he ended up starting his home inspection company because he had 3 floods in the basement of the first property he bought.
Wow.
Yeah. And it was an older property. It had polybutylene pipes in the basement, which is this old form of plastic that was used for water pipes that we've found out now deteriorates for 10 to 15 years. Yep. So there was 3 water damage claims. And then he's like, what's going on? He'd gotten a home inspector and they didn't find that problem. you're not going to have as much of a problem with that when you're buying new build homes. The other thing that I really want to hit on why new builds are so valuable is roofs. August of 2024, biggest roof claim event in the history of Utah, home claim event, over $1 billion from that hailstorm that happened in insurance claims alone, which is great. Obviously, if your roof's been damaged, you need to file an insurance claim. But it was so big, it's changed the way insurance companies in Utah deal with claims and how they write their policies. A lot of companies are requiring higher deductible for your roof or for wind and hail damage specifically. So instead of $1,000 deductible, it's like, hey, we're requiring a $2,500 deductible or a 1% deductible. So if your home is worth $500,000, you have a $5,000 deductible or whatever it works. Or some insurance companies won't take on new business if your roof is over a certain age. I have some companies like, if your roof's over 20 years old at the time you write insurance, automatically denied. We're not gonna write new business for you.
Yeah.
Or they'll force you to do an actual cash value endorsement, which means, right, like I was saying, actual cash value about clothing earlier. If your roof's damaged in a claim, we're only gonna pay 15% of it or 10% of it in the worst case scenario.
Because that's what it's worth.
That's what it's worth. The actual cash value of a 30-year-old roof. Yeah, a new roof might cost 20 grand or 30 grand, or depending on the size of your roof and what materials. Yeah, but your roof's 30 years old. The actual cash value of those shingles on your roof right now is only 3 grand.
Yeah.
So they're only gonna pay 3 grand. You know,
that makes sense.
After your deductible.
Yeah.
So if your deductible's $5,000 for a wind claim and it's a $30,000 repair and they're only giving you 10%, your claim's going to get denied because the deductible is higher than the claim amount.
Yeah.
So if they're only $30,000, you have a $5,000. So insurance companies have changed that. And having a new build, if your home was built within the last 10 years, they know your roof's new.
Yeah.
Right. So that's another reason why insurance can be cheaper. That $600 quote I got, partially because it was new, partially because it has a brand new roof. It's 2025, brand new roof. So your insurance will be cheaper. In fact, one of the advice pieces I give to I have a little sheet that I send to real estate agents that they buy and sell is ask the seller, or if you're a buyer, ask the seller. If you're selling, ask people that you're representing how old the roof is, because if you replace your roof, it's going to make your home sell faster because it's going to be easier. Certain loan programs won't accept insurance if it has actual cash value on the roof because it's too much of an exposure for them, right? It's like, hey, you have a $40,000 potential roof claim your insurance company won't pay for. You're not gonna be able to pay $40,000, and then you're gonna have default on your loan, or we're gonna have problems. We won't lend to you with this insurance, and no insurance company is gonna let you do that, or you're gonna pay stupid expense. I had one guy that he absolutely had it. It was like a $9,000 a year policy. Jeez. He'd had 2 home claims and he had an old roof, right? But it was the best he could find. He ended up going with my policy. It was $9 grand a year because he had to have it for the loan requirement on this home he was buying. It's like, so if you can replace your roof, it'll make it easier to sell your home. Usually, obviously, it'll make it sell for a little bit more too. But if you're a buyer, you can use it as leverage. Hey, it's going to be easier for me to get qualified for my insurance. It's going to make my insurance cheaper. See if you can find a deal to wrap that into the loan, right? See, like there's ways you can make it work. See if you can get a seller concession to help pay for the roof replacement. And that'll make the insurance a lot cheaper too for you.
That makes sense. Yeah, I actually had someone recently, this wasn't one of my deals, but a coworker of mine has someone under contract right now who their home is purchased on a contingency. So they have to sell their current home in order to purchase our home in Salem. Their current home just went under contract yesterday, and it was listed for like 3 days is all. It went under contract super quick because they just replaced the roof.
Yes. Yep. It's the number one thing I'm seeing, because I have a lot of loan officers that reach out to me for a second opinion on insurance. They'll be like, hey, this guy got a quote for $3 grand. Can you do better than that? And I'll find something most of the time. 9 times out of 10, I find something. But sometimes they'll be like, hey, we have a problem. This policy, we got a quote that's really cheap, but we can't do the loan on it because of the roof age. I'm like, why are we not trying to get the roof replaced? But it's a bigger deal than you'd think, especially like this wasn't a big deal a year and a half ago. This wasn't a big deal 2 years ago. It's since August 2024, insurance companies scrambled to change their stuff. February, January, March of this year, just 9-10 months ago, 11 months ago, was when all these new programs rolled out. So a lot of people, they're like, my insurance has been a problem. Their renewal rate goes up 50% this year. It's like, why? Oh, they changed the way they do their roofs. You have an old roof. They're letting you keep the replacement cost value, but they're charging you through the nose for it. So yeah, your policy doubled or went up 50%, or it went up $700, $800. And it's like, oh my gosh. And I had some people where it's a simple phone call. It's like, well, let's change it to actual cash value. Oh, look, your rate drops $800. Yeah, but now you're not covered. And so some companies are making exceptions for if you had a policy before, and it's just, hey, if you want to change to this, it'll make it cheaper. But we get it, you had it. But some companies are like, nope, everyone. Some companies, instead of doing actual cash value, replacement cost value, they're doing a schedule. So it's based on the age of your roof at the time of the claim, will do. So it's basically actual cash value. Like, so for the first 12 years, 100%, and then 93, then 86, and then by year 25, it's 10%. So it's a schedule. That way there's no arguing about the actual cash value. Well, is it really $40,000, 10%? Like, what if it's $50,000, 10%, right? There's no argument. It's whatever it costs to replace your roof, we're only paying 10%. That's a schedule.
That makes sense. And if you're in that situation, you can actually weigh the benefit of replacing your roof on your own. Once you get to, maybe your insurance is only covering 10 or 15% of the cost of the roof.
Yeah. And it's definitely a balancing act, because it's like, okay, it might save me on insurance if I replace my roof but that's only a big problem when you're already living in the home. Sure. Right? When you're trying to get insurance when you're buying a new home and you can't get an insurance policy because it's a nightmare.
That makes sense. That's actually, that reminds me of a conversation I had recently about, this is completely unrelated, but it's a similar concept. Interest rates when you're purchasing a home. So a lot of people right now are on the fence not purchasing homes because interest rates are high, historically speaking.
Yeah.
If you're looking at the last 10 years.
10 years. Right? If you look at the last 30 years, they're really low.
Right. Right.
My parents' first interest rate, I think, was like 14 or 16% in the early 90s.
Yeah, it's true. And a lot of people bring up the argument, well, their house probably only cost $50,000.
Yeah. 135, yeah.
Which is much less than what they're costing now. But the fact is, we cannot, if you want to own a home, you have to make peace with the fact that prices are higher than they've been in a long time, probably ever. And interest rates are not ideal.
Yeah.
You're going to be paying a lot for a home. But what a lot of people don't realize is the effect or the, negative effect that waiting can have on the equity that you hold in the home. Mm-hmm. So if you're, and this is a statistic I read recently, who knows how true these statistics are, but I read that if interest rates in Utah dip by 1%, we'll see a 19% increase in sales prices.
Yeah. Because people focus on the mortgage, the loan price.
Correct.
So if the interest rates go down, the prices go up because it's like, oh, well, the mortgage is still going to be $3,000 a month.
Right.
So they'll average out because people focus on monthly payments.
So if you're on the fence and you're thinking, I want to buy a home, but I want to wait until interest rates get below 6% or 5.5%, because by then my monthly payment is going to be X, given a certain purchase price. Well, that purchase price is going to be 15 to 20% higher if rates come down a full point. So your monthly
You'll end
payment,
up with the same monthly payment,
either the same or it's going to be higher, right? So this is something that DR Horton, this is what I love about my job, is I get to run these different scenarios. So right now we're offering a 3.875% ARM,
which is insane. Super low.
ARM stands for adjustable rate mortgage. The way this works, it's locked for 7 years. After those 7 years, it can adjust as much as 1 point every 6 months. So let's say you live in a home for 7 years. You hit the 8th year, it adjusts by 1 point. So you go from 3.875 up to 4.875. You have 6 months until it can adjust again. One thing to note is it can go up or down, and it's based on the market, right? So yes, theoretically, it could go up to 8.875. That's the cap. How realistic is that? Probably not. But if very realistic.
Go up to 14% like they were 30 years ago, that's still a great
deal.
A
great rate, right?
And if not, just refinance.
Exactly.
Most people refinance within 3 to 5 years anyways.
And that's what I'm getting at, is
if interest rates ever dip, refinance.
You can get either you're a first-time buyer and you're only going to be in the home for 5 to 7 years. You're going to have what would be a fixed year or a fixed rate, because it's a 7-year loan, right? Fixed. So you're getting 3.875% on a fixed rate to you. Let's say you plan on living in that home for longer than 7 years. Yeah. If rates come down, prices are inevitably going to go up. Why not purchase now, take advantage of the 3.875, rates come down sometime in the next 7 years, most likely in the next 2 years, you can just refinance. Your payment might go up a couple $100 per month.
But it'll be fixed at that point.
It'll be fixed, and you will have saved so much money, because if you would have waited and rates come down a point, then your purchase price is going to go up $50,000 to $100,000.
Yeah.
To me, it's a no-brainer, because I'm seeing people that are coming to me with a purchase price in mind. They're saying, I'm pre-qualified at 6% for $450,000. I say, okay, let's go take a look at these properties. We go look at them. And then one of the main questions that I ask people in my sales presentation is, what do you want to be paying monthly? Normally for people that are qualified for $450,000, their monthly payment's going to be around $3,000, maybe $3,200 for a townhome. If they come to me and I ask them that question, they tell me $3,200. I can usually get them into a home that's valued sometimes as high as $100,000 more, just because of the interest rate being so much lower, and their monthly payment's going to stay the same. So if you're in the market for a home, you're looking at something, you're pre-qualified at today's interest rates, I can potentially get you much more house for the exact same payment, and it's going to be locked for 7 years. On top of that, you're getting a cash incentive. So to me, this is what I love about my job, is because I can show people these scenarios and they can see like, oh, wow, I actually save a ton of money building or purchasing new construction when I'm getting these incentives. And this isn't just DR Horton, by the way. This is new builds. I advocate for new construction purchases, regardless of DR Horton or not. I think that we are offering the best deals right now in the state of Utah, but regardless, if you can get into
3 quotes, that's what I always tell people.
Yeah, totally.
Some different options.
I have people coming all the time. Oh yeah, I'm not interested in this. I'm not interested in moving forward right now because I want to go and explore other options. My response to that is great. Like go
back in a week.
Yeah, exactly. I'll see you in a week. I'll text you. I always tell people I'm going to be super annoying and I'm going to follow up with you probably at least once a week just to see how you're feeling about things and to follow up. I feel like if I forewarn people that they're going to be annoyed with me, then maybe they won't actually be annoyed with me.
Yeah.
So anyway, long story short, I think new builds, new construction is the way to go in real estate, unless you're a fix and flipper and you're wanting,
which I don't want.
You're wanting all that work. So,
anyways, we are running out of time. In fact, we're over time.
My bad.
No, you're good. We had a good conversation. This has been awesome. Just really quick, just want to give people your information. If people want to reach out, they're listening to this like, hey, I want to check out some DR Horton places. How can people get a hold of you?
Yeah. Phone number is 801-367-6595. Text or call me. Email address is kwallin@drhorton.com. My Instagram.
With 2 L's.
Yes, 2 L's. Thanks for bringing that up. WALLIN. My Instagram is Kenyon Utah Realtor. Same with Facebook.
And that'll all be in the description. So check the description on Kenyon that way.
Can I add something onto that real quick?
Yeah, go for it.
I have a lot of agents that reach out to me asking for information on DR Horton homes in other communities. If you remember, I'm exclusively selling in Salem right now. So I cannot sell in those other communities, but because I believe in helping other people out, I love to refer people to other agents in other communities. I don't get anything from that. By the way, I'm not making money for a referral or anything. I just like to refer good agents to good agents or good buyers to good agents. So if you or someone that you're representing is looking for a new build anywhere in Utah, whether it's St. George up to Cache Valley, let me know and I will send you the contact of one of our agents that can help you out.
Sweet. Awesome. Well, thank you so much for being on. I really appreciate it. This has been awesome. I've enjoyed it.
Yeah,
we'll have to have
thank
you back
you so
on
much.
Again sometime.
Yeah, this is fun.
Okay, thanks, Kenyon.